welcome everybody. And Jim, maybe you can kind of give me an idea of who's in the room.
Well, we've got about 13 or 14 people here. They're all active traders, although they're not trading the US markets. All of them are familiar with options, but not necessarily with complex option positions. And
Okay.
we're all very excited to welcome somebody from the other side of the world.
Well, fantastic. Well, welcome everybody. I guess to start off here, of course, you always have to start off with the legal stuff. So everyone can see the slide here, and I guess I'll read a little briefly from this. Is from Lock in Your Success. They're not a broker-dealer. They're not engaging in trader education and training. This is strictly for educational purposes only. We may be looking at different things on software that will represent simulated type situations, and so everyone understands that, and obviously everyone's responsible for their own investment decisions. And as it says down here, these are all hypothetical computer simulated performance results and believed to be accurately represented. And I'm sure everyone has heard this a million times, but there it is, and we all say that we have to do it, so there it is to please all the other folks. So with that ado, unless there's any questions with that, we can start in. Basically, I'll just put the slide up here as M3 trading strategy, but just a brief moment about myself. I've been a options trader since about 2008. And basically started with mentoring a program back around that time frame, which was a lot of reading books and also getting some personal mentoring, and basically progressed along the way. And finally, until about 2009, 2010, I met John Locke and ended up being able to come under his leadership and mentorship, and have been with him ever since and been continually trading. This is something that I do as a full-time business. I'm not teaching, but trading. The teaching aspect of it only came in about, just a little bit over a year ago, where John was getting so busy with students that he asked me to come on board to help out and be able to teach. So that's what I've been doing since about I guess of April of last year. So I've been doing one-on-one mentoring and doing these type of webinars for folks, or now I guess I can say around the world, not just in the United States. So I'm glad to be able to do this for you folks in the UK. And too bad we couldn't have hooked up about maybe about a month or so ago. I was in London. So, but it was just for a brief time while my wife and I were on vacation over in Europe. So, but anyway, it is something that I do full time. I employ the strategies that John mainly trades, the M3 trading strategy, which is what we're going to talk about today. But obviously, if people have questions about any of the various programs that John teaches or has created, the M3 trading strategy, the bearish butterfly, the rock program, the M21 program. I guess of late he has the advanced position management that we did about a year ago. And then just recently we just got back from Hawaii doing the trading triangle, which was a very, very nice session that we all did, and possibly I think that just got released for just yesterday or the day before for distribution or for purchase. So those are the various programs. I met Jim in Hawaii, and he asked me if it was any way possible that we could come together to be able to reach out to your particular group, and I was very happy to do that. We just had to work a time frame that worked for everybody, so I'm glad we were able to do that. And I would say this morning, Jim had asked me to kind of go through the basics of the M3 trading strategy, so I put some slides together here, and also have a trade that I can briefly go through. And I guess depending upon how quickly you guys get up to speed this morning, be part of the conversation or be part of the trade. Jim and I talked about this a few weeks ago, and we'll see how that goes and see if we might be able to challenge a few folks in the room to see if they want to kind of get their perspectives on maybe what to do on certain days of a trade. So, but because of that no one, I believe, in the room is trading the M3 right now, maybe this is a good place to start. So I guess just one part of background. By education, I'm an engineer by trade, worked in manufacturing for various kind of computer-related companies over the years. I've been in charge of manufacturing companies in Europe, in North America, and also in the Far East. So my manufacturing background has has covered kind of quite a few different areas of the world. Lucky that the companies that I was working for had interest in many different parts of the world. And so, but then I did get out of that. I left that business back in the early 2000s, and then actually decided to do something very different and ended up going into the wine business. So, which is obviously a very key thing in Europe with all the wine there. And luckily I had the opportunity to come over and had wine trips to France and to Germany and Italy. And so I became a sommelier, and so now I enjoy that. And it's just a nice hobby. But like I said, back in 2008, that's when I ended up going into trading. And now, as a matter of fact, many members of my family, two of my kids and my brother, who's retired, they're all full-time. My kids are all full-time traders, and they're 24 and 31 years old and have been trading for about 5 years. So I think sometimes people find that interesting to hear. People can actually do this as a full-time job. So anyway, so I guess that's enough about me. Jim, any questions just to start off?
No, that sounds good, Dave. I think we're ready to go here.
Okay.
There was just one question. Was the M3 your simplest strategy? I said that it wasn't the simplest, but it's probably the basic strategy that John used.
Yeah, I would say that the bearish butterfly is probably the easiest strategy because it's the one that is more rule-based.
Yeah.
Whereas the M3 trading strategy is one that is as John always says, is the kind of the starting block, if you want to call it, for all the trades. It's a one that is really it's designed to teach you how to trade options while keeping you relatively safe compared to, and that you don't have, it's not one that is meant to make a lot of money, but it's also meant to not lose a lot of money. So it's a way to basically kind of get in the ball game without having a significant risk. Whereas in the bearish butterfly, it tends to be a trade in which you tend to have more of an opportunity to earn much more profit. But what comes with that is also the opportunity, or the downside of that is that there could be good-sized losses. And also there is the situation where you would have significant drawdowns on a day-by-day basis, which many people find to be a little bit uncomfortable if they're not used to that. So that's why the M3 trading strategy is one that we tend to start off with, and to get really people, get them going into something that is something they can feel comfortable. They can take a small piece of it and kind of learn from there and then grow their understanding at a safe pace. And also we want to make sure that people's trading accounts don't get ruined right up front. So that's the biggest reason why we start with the M3. And as such, the M3, as you can see on the screen, it's a trading strategy that is not a strategy that is designed to utilize technical information or directional strategies. So this is one that's basically called a market neutral income trading strategy. And as it says, it's designed to, you can have large price movements, you can have small drawdowns, and basically it's teaching you how to trade. And this isn't something where you're just going to follow a rule book. Now, some of that this morning, I'll probably go a little bit off base from that, and since we don't have a lot of time this morning, be able to kind of show you how to be able to do some things with maybe just to kind of, as I did it with my kids, I did something to kind of pique their interest, but not give them the entire understanding right up front, because I did not want to give them so much information that they were basically drowning in information. I wanted to give them just a small piece, kind of like the tip of the iceberg, and just a few things to kind of watch in the trade, and then see if they would be interested even in doing such a thing. So I thought this morning that would probably be a nice way to be able to start you guys off, because you do have experience with trading, various things, but I thought this would be a good way to kind of get you started. And we'll give some simple, as I kind of always refer to it as you'll all be pilots this morning. So I'll give you maybe a few different things to take a peek at, and I think I kind of prepped Jim on this a couple weeks ago, and so maybe we'll see how that works out when we go through an actual live trade, or an actual trade that I have in the software, and we'll see if you maybe participate a little bit with that. So that's the M3 trading strategy. It has, like I said, it's got a basic framework of a very effective income trade, but it does go beyond that by explaining how to properly analyze and understand your position, and that's mainly used through option view software. And so where you can actually look at what your risk is every day, you can see what it is and be able to understand what you're actually what you're in, how the options are working, and be able to understand how to use them. One of the key things is that, when you say that you really truly want to understand your position, you want to be able to identify your risk and how to correct it if in case the market has been changing. It's simple to adapt a strategy to changing market environments, and it's ensuring that hopefully this trade will be a good trade that would survive in many different types of markets. It says here it's designed to lose as little as money as possible, which we talked about, and effectively each day you're less trading and more, as I say here, monitoring, and you're monitoring and identifying your risk each day and trying to figure out, okay, do I need to do something that day to be able to minimize my risk? And one of the things that you also learn is how to make proper adjustments to keep your static and dynamic Greeks in line. So typically we'd be looking at delta, we'd be looking at vega, we'd be looking at theta, and gamma. So those are the Greeks that we tend to look at to try to assess our risk. Trading strategy is one that typically has a fairly high win rate with mild drawdowns, and it's like I said, it was designed to minimize your risk while you learn to make the money. And I think it would make sense that risk-adverse traders also would gravitate towards this type of trade, as opposed to people that are just looking to make that feel that they know that the market's going up or down, and they want to take a trade to be able to take advantage of that. So without further ado, what we'll really get to is, Jim, you can see this slide, is that correct?
Yes.
Okay, and I realize some of this might be quite small and you may not be able to see it, but if you just take a look at this graph right here, we would call this basically, very simply, a butterfly. We were basically putting on a butterfly with a deep in the money long call. So that's the basic trade, and some of the entry guidelines that we look at are, we put it in typically, at least for this demonstration, is 56 days till expiration. So remember, we're doing this in monthly expirations, and we'll see that when we come to the demo. I'll show that very clearly what that looks like. But just to let you know, this trade can be entered anywhere between about as small as 15 days and as long as 70 days. So it's quite versatile. This particular trade we're going to put as typical is about we call it a 10 lot, and what that means is that there's a butterfly that's there's 10 puts, there's 10 long puts, there's 20 short puts, and then another 10 long puts, each using about a 50-point wingspan for the butterfly. And that, if you calculate it out, that comes out to we have a planned capital of what we think that we need to use is about $50,000. Now, we don't typically use all of that. Typically, we might use maybe 2/3 of that, but we always like to keep that. Remember, this is a safe trade, and we want to make sure that people have plenty of capital to do whatever kind of adjustments they may need to do, or to have enough capital in place to be able to easily also exit the trade when need be. So there's one long call, and those calls are delta, and it's close to about 90 delta or so, about 90 to maybe 95. And the puts, we typically start off with the short put about 15 to 35 points below the current market price of the Russell 2000 index. And also, there's the ideal Greeks for entry position is the delta of the combined position. That combined position would be the 10-20-10 butterfly plus the long call. If you add up all the deltas, which the software does for us, we would be able to try to get our delta close to neutral or somewhere between about 0 and -10. The key thing with this trade is that you can see by this graph is that we like to be able to have a this is the expiration graph right here, which I'm sure you're familiar with, hopefully, and this dotted line here is the T plus 0 line. So that's time, meaning today. And we like to keep that as flat as possible so that, as you can imagine, we want to have enough room to be safe on the upside, and also a significant amount of room to the downside. Obviously, you can't protect forever, but as you can see, if there's ever an Achilles heel to this trade, it would be to the downside, because you can see eventually, if you had a huge downside, you could actually come down quite a bit. Now we have what I will show you, and I believe the next slide is certain parameters, and these are some of the things that I want you to try to remember for today that we will monitor. And so in other words, we wouldn't let the trade go down into this area down here. Before it would get there, we would be making adjustments to it to address our risk, just like we would do to the upside. So what I'd say at this point is that probably there might be some questions regarding all of this, but I would say is that this is just kind of a first pass. When we get to the actual trade, you'll be able to see it a little bit more clearly. So you may want to just hold until I put the demonstration trade up. But this probably is a little bit more indicative of some of the adjustment points, and I tried to put this slide together for you guys, which the blue area here, Jim, you can see this, right?
Yes, yes, certainly.
So the blue area here is basically underneath the big butterfly, and we kind of, if you can see up the upper edge of the triangle, we got a little vertical line right here, which kind of identifies the little upper section of the triangle. And these are the numbers that basically are the only things that, Jim, when I told you about like being the pilot, these are the things that at least for the first maybe 20 days or so, these are the only things that I would be asking people to take a look at or worry about as far as if you think you need to make any kind of an adjustment. And what these are is delta adjustment points. So on the upside, if the rut has gone up, that means the trade is going to be creating more negative delta. And so remember, when we're starting the trade, we're between 0 and minus 10. And typically we would start it where we would be right about in this area where I'm kind of circling, kind of like somewhere in this area, which would be between 15 to 35 points below the money, but that would put us in about this area of the graph. In that area, we would say that, in the big blue area, most of the blue, we would say we can absorb maximum negative delta of up to minus 100. Whereas in this edge of the triangle, our maximum would be minus 75, or just outside of the triangle would be minus 50. Going in the other direction, if the rut is going down, which creates more positive delta, our adjustment point would be is that if we get to a maximum positive, and there's a little misspelling here, positive, there should be a little misspelling, a more positive delta of plus 50. So these are the only things that we'd be asking you to think about. So if you want to write these down, Jim, and maybe suggest to everybody in the audience, just to write these things down. Just this slide right here. This is really all you need to know. So the delta within the tent would be minus 100. So in other words, if we get to minus 125, we need to make an adjustment. If we're in this area here, the edge of the triangle, we're minus 75. So meaning if we get to minus 85, we need to make an adjustment. If we're outside of the triangle here and our delta is, let's say, minus 65, which would be over minus 50, then we would need to make an adjustment. On the other side here, just to reiterate, if our maximum positive delta for the trade is, let's say it gets to plus 60 or 55, we would need to make an adjustment because it would be greater than plus 50. So any questions with this one, Jim, and from the audience? Because this would be the key thing that I want to make people understand is that if this is all that they learn from this, this is a great way to start off.
Yeah, I think everybody's got that. They've made some notes, so yeah, let's go.
All right, very good. So let me switch out here, and I'm going to my option view. So can you see this, Jim?
Yes, we've got option view now.
Yeah, is this clear? Can everyone see this very well? Is it big enough?
I think so, because quite a few people have got their own laptop, and it's also on the screen. So I think.
Okay, so at least this is.
Where the delta is, I'm sure they can That's the important one, isn't it?
Yeah, so if you kind of look towards, so this is basically, so I'm just going to, this is the one screen here with all the individual things, but just so that people will see it. This is a trade that I put in, and this is on Friday, May 23rd, 2014. And this time frame here is West Coast time here in the United States. And so this is basically about a half hour before the end of the trading day. Okay? So you know, for you guys, this would be, I guess, what about, you know, 8:30 at night or so. Is that correct?
Yeah, that's right.
Yeah. So basically, all the trading that I did here was basically all the looking at the trade would be, you know, usually about an hour to you know, half hour to an hour before the end of the trading day. And this trade is designed so that this is not something that you have to watch, you know, every minute of the day. It's meant so that if you have another job, if you are doing other things, it's actually something that if you probably looked at this all day, you'd probably get worse results because you probably would end up over trading during the day. So we usually take so if you had things to do and you could only be, let's say, like for example, at some point my son had a job where he had to you know, be at work at 9:30 in the morning. Well, that meant he only had about maybe 2 or 3 hours early in the morning to be able to do his assessment and do any trading. So it's not like you have to do it a half hour before the end of trading. You basically pick one time where it fits into your lifestyle and your either work schedule, lifestyle, or whatever, to be able to make your assessment. And I've seen from experience, from both trading it at some time during the day versus at other times of the day, in the long run, it comes out pretty much the same thing. So, and I've seen this with the results between myself and my son, where he had to go to his job early in the morning, his other job, his other full-time job, because he actually has a full-time job and also does trading full-time, so you know, he kind of does double duty. And I've seen the results be very, very, very similar. So, in case that was a question, if we have, you know, if you have to trade it at, you know, 8 or 8:30 at night in London. So just to take a look at the trade. So this is a little bit bigger picture. So now hopefully you'll be able to see this a little bit better. And the nice flat T+0 line. Okay. And basically, like I said, is that we'd be looking here to see when we would either get all of those delta adjustments. So as you can see, this is where the from the prior slide, the big blue slide where I showed that little vertical line of that little kind of section right down on the end here, you know, we're probably just outside of that here. So any a little bit more movement up in this area here, we'd be at the -75 area. Right now we're in the -100. Down here we'd be in the +50 area, or outside of the tent in this area over here, that'd be our -50 area. So any questions with that?
No, I think everybody's following along, Dave.
Okay, great. Because you can imagine there's so many other things that you could be thinking about here. But literally, if you look at this section right down here at the bottom, I'm not sure, is that big enough, Jim, that people can see this down here? Where it's got delta, gamma, theta, vega right down at the bottom of the screen?
Yeah, everybody's nodding, yes.
Okay, great. So with the start of this trade, we typically started at 56 days till expiration, and this is in the July expiration month. So this is the month of June expiration. You can see this has 28 days till expiration. The July has 56 days till expiration, and these options will actually expire on July 18th. So that's what, just to give you an idea. And this is Option View software, in case anybody was wondering about it. It's a you know, just software that's available for anybody to use. It's obviously you have to pay to use it for a membership or subscription, but it is pretty essential for trading this type of trade. And like I said, here's the August one. This is 84 days till expiration. So you know, the funny part is that, you know, this trade, if you ask me, you know, could I put it on here or here or here? Well, the reality is yes, you could. You know, you can trade it any number of months, but for demonstration purposes and for a lot of the rules or guidelines, that John has set up. He did all of the testing, and all the testing that everyone has usually done has done it around 56 days. So at least it kind of keeps it as a kind of a standard. So as you can see down here in the Greeks, we set this up, upper left right here, you see the Russell. So the upper left thing in this box, the legend, this is the last price in the upper left as it shows here. So it's 1125.90. So that's what the rut is right now. The change for this day so far, as you can see, changes right here, be up 12.1 points. The high of the day is 1125.90, and the low of the day is 1113.80. So at least just a kind of a little bit of a quick explanation of the legend and where that information is. So on a day-to-day basis, we'll probably looking in at this change to see what the market has done during the day, and so we'll look at that. But we'll also keep an eye on our delta here and also where we are in the graph. Initially right here, gamma we typically won't be looking at, theta we will not be looking at, and actually right at the very beginning here for the first at least 10 days or so, we won't be looking at Vega, but that's one thing that we will be adding into it as just as a note. If you want to note this down, is we want to always keep negative Vega. If we all of a sudden find ourselves with positive Vega, and that would happen if all of a sudden we have a significantly large move up in the market, that's one thing we have to look for. And just to give you an idea of that, if we look at the graph, and I can take the little wand right here, if we move this up to the right, and if you can see I don't know if you can see the little greenish rectangular box at the bottom of the screen. Second from the bottom of that is Vega, and right about here it shows Vega turning positive right about 1165 in the Russell. Okay, not sure if you can see that or not, but trust me, that's what it's saying right here. So if you guys want to make a note of saying that around 1165 is when the rut turns 1165, or basically 40 points. So the Russell would have to go up 40 points for us to have to do something as far as Vega is concerned right now. Now, as time goes on, that adjustment point will actually get closer and closer, because the T+0 lines in the graph will start to change. And as a matter of fact, that's probably a good thing to probably show you right at this point. What I'm going to do is I'm going to increase the number of lines in the trade, and what that means is, so I went up to 5. So each one of these lines, so the big one here, that's the big tent, is the expiration graph, so that's at 56 days. The first line that we showed here was T+0, where that's today, meaning May 23rd. The rest of the lines here, I just increased to 5, so we have a T+14, so that means 14, exactly 2 weeks from today. T+28, so that's, effectively 28 calendar days from today, or 42 days from today. So as you can see, and I'm not sure, Jim, how much of this is typical for what the folks in the audience would understand, but this is how the graphs would change over time. And I know this is something that people, if they haven't been involved with options, this is a little kind of crazy that you would kind of see this and understand this, but this is how actually things do change over time. And as I call it, underneath the tent, which is primarily where the money would be made in this kind of a trade, as the T+0 lines tend to gravitate to the north, or as I would say, kind of get a little hump up a little bit to the north there, area under that curve, for anybody that understands that area under the curve, that's where the profit is made. Okay, so anything above the 0 axis and underneath the curve, that's where money is to be made. Now, obviously, that's great underneath here, but not so good over here. Okay, so you can see that there's a window of opportunity that we like to be able to kind of keep the trade in to be able to make money. Well, as the market moves, with the guidelines that I gave you, we will adjust this trade so that it will, so that we won't find ourselves out here and way down here and be losing all this money. So that's part of the trade but part of this thing is seeing how the market moves over time. Because ideally, you can imagine is that if we were right here as we start the trade, the best thing that would happen is at the end, and let's say we look at 42 days from now, well, where would be the best place to be in the graph? Well, it'd probably be like right here, right, Jim?
It sounds good, yeah.
Right, but to be there today, if you were down here, would mean a tremendous amount of risk to the downside. So it's not good to be there today. We'd rather be up here where it's much safer. So we have room to the left where we don't get hurt. We have room to the right where we don't get hurt. Because this trade is most vulnerable for right at the it's most vulnerable at the times where later in the trade and you have large market movement. At the beginning of the trade, we're in a safe environment here, because remember, this trade was made to be safe to learn how to trade options. So we want to be up in this area so that we can move, the market can move one way or the other, and we won't have tremendous issues. And if you can see down here, the top line of the P&L down here, see down in the gray area down the bottom here, the first line is P&L, or profit and loss. You can see that with a a fairly large movement, the amount of dollars that you'd be down moving, probably 40 points or so in either direction is almost, it's down maybe a couple $100, and we're saying that's totally fine. So so there's no issue there at all. So let me just pause there for a second. I'm going to grab a drink of water and see if there's any other questions.
Any questions, anybody?
We're good so far?
Yes, we're good so far, Dave, yes.
Okay, so well, either people are so confused that there's no questions, or everything is very clear. So either one of those two is happening. So, but we'll
they all want to go to the T5 line.
There you
the center of it, the peak of it.
As a dear friend of mine who is my neighbor, who is actually from London, and I love one of his expressions, and so maybe you guys will appreciate this. And he's up in his early 90s right now, but a very dear friend of mine in the neighborhood. And he was actually a Boeing engineer for many years. But as he would say to me, this was when he was just walking around the neighborhood, and I said, "Boy, Jim," I said, and his name is Jim as well. I said, it's amazing how you can keep going on here. And he says, "Well, Dave," he says, "I'm just battling on." So I don't know if that's a common expression or not, but that's what was from him.
Yeah.
So just we'll I guess we'll battle on here. So what I'm going to do from here, guys, because I know we have only so much time. There are days in here which there is literally nothing to do. So as opposed to just looking at the screen and saying there's literally nothing to do, let me go to a day where there is actually something to do. But maybe I'll just go to one day prior, just so that people will have at least one standpoint that we can take a look. So let's take a look at June 2nd. So we'll advance approximately a week or so. And so basically, if we were to take a look here, so Jim, maybe you can be the first person, because maybe you have the most experience with this. Would you say at this point here that we're at 1129? We're in this part of let me reduce these lines here. We're at this point in the graph, okay? Would you say at this point, given delta here of -10, would you say there's anything that we need to do at this point?
It looks very good to me, Dave.
Yeah, and so, okay, so Jim, you just did one day's worth of work.
I can relax now, can I? Okay,
so hopefully now you can have your, you can head to the pub or head to the bar and get your pint and be all set, because you've just done one day's worth of work. So how's that?
It sounds good.
Okay, but to everybody else in the audience, I mean, look, the delta is -10. We're in this area here where we're under the 10, so remember our parameter would be right around probably -75, but we're at -10, so we have no problem at all. So what has happened in basically from May 23rd to June 2nd? Well, basically nothing. The market has probably gone up and down a little bit, but where it is right now, we're fine. So there is literally nothing to do. So let's advance to a few more days where actually we find a situation where we have something to do, because we can see that the market actually now has popped up quite a bit. Okay, and so the market has gone to the point now where, let me just make this a little bigger. So the market has gone to the point where we're up in this area up here. Okay, so we were back in here, and now all of a sudden the market has jumped up quite a few points. Okay, so now I would ask maybe somebody in the audience, our delta is minus 34, so we're outside of the tent. So I would say there's no problem there because we're not over minus 50. But take a look at Vega down here. We have a positive Vega. Okay, so literally, remember, there was only really two things to look for: delta and Vega. Vega has now gone from negative to positive, so we have to do something. Okay, so one of the easy adjustments that we will do, okay, and I just click on this little button over here, so you'll see me clicking this on and off. It will actually change, it will show now the trade, and basically I suspect what I did, I'll have to look here, I probably took some of these shorts right here and rolled them up to here. Okay, I'm not sure exactly how many I did, but I think I did 10. So basically I would have done this, I would have gone like this. Okay, so I would have done a vertical spread, okay, so this would be a vertical spread, or a put, as people probably think of it, a put credit spread. Okay, so I'd be selling minus 10 at 1110, buying the 1100s, and the terminology that I would use is that we're rolling 10 of these shorts up a strike. So from 1100 to 1110, and what that would do, as you can see from over here, would reduce delta from like minus 34 to still just negative 0.71, but it would take our Vega from positive to negative. Okay, so if you to take a look,
Dave.
Yes.
Dave, it's just worth stressing that we're 2 weeks into the trade now.
Yes, we're here at July.
Yeah, we haven't had to do anything for 2 weeks. I just want to make sure everybody understands that.
Yeah, so we're 2 weeks into the trade, and this is our first time that we actually have to do anything except doing a quick check. So here we are. I'll click the little button here, and there it is. So see what I did? So what I just showed you here is exactly what I did here. Let me get rid of this in the trade column. And so here we are. So we corrected our Vega to make it go from positive to positive to negative. And the way that we did that was just rolling up some of these shorts. As simple as that. In this particular case, we did this, and one of the things that we have to look at is we know that we can do this as long as this delta doesn't turn positive. So I know this is a little bit tricky, but in other words, we can roll these shorts up, but if I wanted to roll them more, this delta would turn positive. And if that happens, then that would mean that we would have to go and have a little bit, instead of just a little simple vertical like we did right here, we would have to take this entire, all of these puts, and we would literally have to roll it up because we would just be getting too far out in this area up here. We would have to take the entire butterfly here and basically mosey it up to the right. Okay, and we would usually, bring it up about maybe 20 to 30 points higher than where it is right now. So, and actually, I believe in that's exactly what's going to happen to us. So at least you'll be able to see that. So that's a little bit more of a, not aggressive, but a little more complicated move. So here we are with the position, and now we've corrected it, and we're fine. Okay. So if we just go, I'm just going to go 2 days. Sorry. We'll go actually one more day, actually just over the weekend. So here we are. We did that on Friday, but now here we are on Monday, and now all of a sudden, sorry guys, I have to keep clicking this thing because it shows what the trade is. So here we are. Our Vega has now, we've continued. We went up 10 more points, and one of the other general rules of thumb is that if our long strike here, which is at 1150, so we're at the 1150 puts, if we're about 10 to 20 points above 1150, so in other words from 1160 to 1170, that means we're probably going to, what it will mean is that these little simple vertical spreads just won't work anymore for us. And we basically have moved far enough away that we need to take the entire butterfly or the entire trade as it exists right now and basically effectively just move it up. We have to move the entire structure up. And so here we are in that exact case, because if we need negative delta here to try to correct the delta. Since we don't have any more, we know that's one indication that we need to do it. The other indication is that the simple one is that, oh, well, we're like almost 25 points above our longs. So that's almost an immediate indication that, okay, we need to do something here. We need to move the whole thing up. So I will do is I will just move the whole thing up. And so as you can see here, so the whole thing just got moved up. And to correct our delta, to get it into a better shape, I simply took 5 of the original shorts, okay, and moved them up 1 strike, okay. So in other words, if we had not done this, okay, our delta would be just a bit high here. Okay, so I wanted to reduce the delta just to make it a little bit easier for the trade and create this position. And if you take a look to see what this actually looks like now, wow, that looks like what it was almost like a week ago. So we basically remember we were way out here, and we basically we took this whole structure and we moved it up, okay, to come underneath the tent, okay. So if we take a look at, let me just show this. I'm going to show this. This is where we were, okay, and then we went to here, and so I superimposed them on top of each other. So this was the former trade. We can imagine this, and we were sitting out here, and so you can see we basically took this structure and just moved it to the right. We just moved it up to here so that we were be able to get ourselves underneath the tent. Does that make sense to folks there? Because I know this is a little complicated.
Yes, everybody seems to be nodding. Yes, the question was, are all the costs taken into account, so if they need sold options and everything else?
Oh,
and
I'm sorry.
The quick answer is yes.
Okay. So Jim, I'm going to ask, so did you actually pass out the beer and food while we're doing this, or are you guys all going out afterwards?
I think everyone's on the phone to the brokers at the moment, putting this trade on. It's 2014.
That's right. If you could only go back in time, right?
Yeah.
Okay.
So, I think everybody's following along, Dave.
Okay, very good. Well, let's as they say, let's battle on, and let's go up to the. I'm going to go in about another 10 days. I'm going to go to June 18th. Okay. Okay, so nothing has been done. Okay, nothing. Oh, hold on. Okay, so nothing has been done at this point since the last 10 days. So 10 days went by, absolutely nothing happened. Okay, so now remember, we're already 26 days into the trade. That's 26 calendar days. Okay, and at this point, we're looking at this and saying, okay, so where are we? Our delta is minus 81. Well, depending upon where we are with the tent, if we're in the middle of the tent, we have no problem. But let's see where we are. We're outside the tent. So does anybody feel that we need to do something here? Anybody willing?
Depends on the delta.
That's right. So the delta is over minus 50, so it's minus 81. So we just need to do a minor little adjustment. So we'll just take some of these shorts here and just move them up a little bit. And let's see if that's what we did. Okay, well, actually, we moved them up to here, but we found that wasn't far enough. So we moved them up 1 more strike. Okay, and to bring the delta down. And usually, what I usually do is that if our parameter, our guideline is minus 50, which is our maximum, usually when I make an adjustment, I'll usually cut it approximately in half. So as you can see here, we're at minus 23, which is approximately half of 50, and there you are. And the way that we did that was, just to reiterate, we took 5 here, and we basically, I tried to move it here, and what I found was that we were still at minus 54, so not quite enough, okay? So I said, okay, so what do you do? Well, take it and move it up 1 more strike to here, and then we get it down to minus 23. Our Vega is still negative, and we have our position. Okay? And there we are. And here's what the position looks like. So we're very, very, and just to give you an idea, this is always, in my view, and also John's, is that in this area of the tent, or just outside of the tent, or just inside the tent, this is, it's kind of a, I don't know how many people are in the, technical people there are in the group there, but even, I think, human dynamics is that people like to be, if they were in this kind of tent, the most comfortable place to really feel like to be comfortable is kind of like in the center of the tent. I mean, I think people like to just be in the center of things as opposed to out on the edge. Well, in this case, if you forget about what this expiration line looks like and just look at the T plus 0, that would give you a little more comfortable. We are in the middle, but we're in the middle of this T plus 0 line. We're not in the middle of this expiration, but we're in the middle of the T plus 0 line. So that's actually a very, very comfortable place to be. So I know that sometimes is a little bit different from folks, doing that. So as far as just a perspective on that. So anyway, just thought I'd mention that. So let's see. I'm going to go off for a few more days here. And here we are. Okay. And again, Jim, maybe you can ask people in the group if they feel that there's something that needs to be done here.
Anybody?
Here's where we are. We're just outside of the tent. And what's our delta looking like here? So maybe you can see what the crowd says.
Yes, no? Oh, you're happy?
Remember, if we're over minus 50 and we're outside the tent, we need to do something. So
exactly.
So we're just slightly over minus 50 or minus 56. So that's fine. So what we will do is just do a minor adjustment, okay? And we'll just move a few of those shorts up like we did here. Okay, so you can see what happened here. I'll just click back. We move the shorts from here, right to here, up to here. So a quick little vertical just to reduce the delta a little bit, okay? And that brings us back to minus 27. Notice about half of 50. It doesn't have to be exactly 25. I think last time it was 23. This time it's 27, which is fine. Now, some people, Jim, might take a look at this and say, gee, we've been in this trade for, 28 days? Exactly, okay. And saying, well, we're up, $884, okay. So $884 divided by 50,000, is about 1.8% right now. Okay, so, some folk would say, hey, I think I'm done. Now, that's not the profit objective that we normally do in this trade. But, if you took this trade as it exists right now, these 28 days, and you get out, and this is typically what you would, if you did this, with the amount of adjustments that you've had, remember that on a yearly basis, this is about a little bit over, if you did this every month, this is about a 20% return on your money right now, just by doing what we did right here. This is about a 1.8% return on your money on the $50,000. Okay. Now the reality is, if you actually take a look at the amount of capital that you've invested in this trade, okay, right now it's about $44,000. Okay. So you haven't used up the 50,000. So but we say that we will use 50,000. We have to have 50,000 in total to be able to do some of these adjustments and whatever. So some people would measure that and say, well, gee, I've made $884, on a smaller amount, on only 44,000, which would be about 2%. So you can measure it any way you like, but the way we normally do it is we say, we take it off of 50,000 because you've had to have that in reserve in case you need it. So it wasn't available for other investments. So like I said, this is a case where, depending upon people's risk tolerance, and when John typically goes through these trades, he usually goes in for a goal of about 10% or 10% of 50,000, which would be $5,000. That would also be what his maximum loss would be. Some people would say that, that's the goal, but more realistic, maybe 5%, which would be 5% of 50,000 or $2,500. Well, here's a case where, we're a little bit less than half of that. So this would be maybe like I said, about 1.8%. So I'm just throwing that out there, Jim, just so that people understand that there's no, depending upon people's aggressiveness or conservativeness, you could end up taking this trade-off today if you like, okay, or not, okay? Does that make sense to everybody?
I think people understand that, but if I could probably speak for most people, I think we want a little bit more.
Well, God bless you. Me too. So let's battle on. Here we go. So let's go on to the 27th here, and let's see how we're doing. Okay. Well, there you go, Jim. Now we've almost doubled the profits. How's that?
Thank you, Dave. Is it that easy in real life?
And during that time frame from June 20th to now June 27th, so another week, absolutely no adjustments, nothing, zero.
Yeah.
Okay, so here we are, and again, this looks familiar. We're outside the 10, so come on, guys, what do we need to do here? Any guesses?
Slight adjustment.
Okay, so what would these people's guess as what the adjustment would be? Any guesses?
I think it's a fairly minor adjustment. Just roll up the shorts.
Yes. We probably just take a few of these right here and just roll them up to here. And this is a good chance to say that people might say, well, could you move these? Well, as a matter of practice, when we're first starting off in the basic M3 trade, we said that we had a butterfly here that was a 10-20-10 when we started off. Now we've moved short strikes up. We've obviously we've moved the entire structure up, but still it's a 10-20-10. Now it's obviously in the familiar setup right here of a condor, 10-10-10-10, very familiar type of trade. Well, what we try to do is where we have our original shorts here at 1140. Our rule of thumb for people is don't cut this more than in half. So we had minus 20 in here, so we took half of these and moved it up, and then now we basically have moved these, and we take those, we leave the 10, the half of the original, we keep that there, and we don't touch it until we actually have to move the entire structure up. What we'll end up doing is taking the other half, or the other 10, and move those originally up to here, then up to here, and if we need to, up here further. So if you watch, I'll click the little button here, we'll see if we moved a few up, and there we are. So we moved 5 now up a little bit. So that's kind of a general rule of thumb that we tend to kind of move that like that. And there's a lot of reasons behind that, but for today, that's pretty much where we are. So Jim, respecting time and everything, more yours than not so much mine. I don't know how much more time. I know we've been on for about an hour. I don't know how much, do we have a little bit more time, or are we, is this a hard line stop here at an hour? For you. For me, I can go a little further if you like.
If I want to go to the end, Dave, yeah, we'd certainly like to continue. It's just our normal time to finish is to get home before the traffic builds up, but everybody's very intent and wanting to make more money.
Okay, well, give me an idea of how much time we have, because I'll try to skip around a little bit to try to get to the point where we need to be. So you can kind of...
Half an hour?
It's totally up to you guys. I have time. I have time to spend.
Not for half an hour.
You got about a half hour?
Yes. Yeah.
Okay.
That's not a hard time, but that's the general sort of...
Okay. Let's see how we can do. Okay.
Yeah.
Well, I'll try to So this is, and I realize this is a lot of information, but the good news is that it is being recorded, and so that you know, hopefully then people have a chance to be able to possibly see this again on a recording, hopefully. So anyway,
Yeah,
so here's
we're definitely looking forward to that. Yeah.
okay. So let's. Okay, so what I'm going to do here is I'm going to go quickly, and we'll go to July 1st, and let me take out these. So here again, and what I will do here, just so that in recognition of our time here, I went through a very, very detailed explanation of how you do the moves and why and whatever. So what we'll do here is maybe go a little quicker, and basically just say that, okay, look what's happening here, guys. We're way outside of the tent here. Let me make this a little bit smaller for you. Okay, so this is where we are now, okay? And typically, as we looked before, we're about 18 points above our longs. So typically, and we have positive vega, so that usually means we got to roll the whole thing up, which is exactly what we had to do. So notice our shorts here are at 1140. So our main ones, and we're going to move those all up. So see, we've raised it up 30 points. We went from 1140 up to 1170. And we raised it up the whole butterfly, but what we did is that we took the 20 that were right here, and we took 10 of them and immediately moved them up to here. The reason we did that was to get our delta in line, and so that our graph would look good like this. Okay? So we've got good distance in either direction, and we're safe for a good distance in either direction. Okay? So that's July 1st. Let's move forward to July 7th. Okay? So here's where we are. Okay? Well, what's happening here? Okay? Let's see where we are. So we're back here now. So we were up here. 7 days later, we progressed all the way down here. Okay? So now this is the first time where we have some, we don't have high negative delta here or positive vega here. Now we have the other issue. Okay, and that's why I like this trade, because it showed you many different things. So now we look and say, aha, what's our positive delta? Now that the Russell has gone down to 1187, we're saying, aha, our delta now is a positive 108.3. Well, that's well beyond our plus 50. So that means we need to do something. Now, again, I'll remind people, is that now our P&L is up to $2,436, okay? So we're at approximately 2.5%, okay?
5%?
I'm sorry, we're at $2,500, which is 5%, so it's the 5% of the 50,000, so we're at 5%, just a little bit shy of 5%. So, many people would look at this and say, hey, we're here with 11 days to go in the trade. Okay, we're on Monday here, July 7th. We've got 11 days to go in the trade. Now, normally, okay, the recommendation that we have for people, especially when they're first starting off, is that they will only trade until, like, for example, if this is Monday, in other words, the only trading days left would be 4 more days to Friday. Okay. So in other words, with 8, 9, 10, 11. So the Friday, July 11th would be the last trading day, okay? And the reason for that is because the last week, we call it the last week till expiration, we say it's kind of reserved for people that are very experienced or professional traders that really have a good idea of how quickly things can happen within that time period. It's kind of you have to be really on your game, you have to be extremely nimble, and you have to understand really what you're doing. For people that are not experienced in that area, we say, stay the heck away. And even in this last week here, it gets a little bit dicey. But I think it's good to be able to show this. So here's another case where you can look at this and say, all right, what can we do here? Maximum delta is greater than plus 50. So in this case, we're going to go and either A, we could take the trade off and take our approximately 5% and go home, and head to the pub, or and we'd have plenty of money to buy for your group today, right, Jim? everybody for around there, or if not, let's continue and do what we would need to do. In this particular case, what we would do is that we would want to reduce this delta from 108, I would say, to, remember what we said, our maximum would be plus 50. So typically we'd like to, again, the same kind of terminology, we get to about half of that. So we want to reduce it to about a plus 25. We typically would not want to change the sign. So in other words, we wouldn't want to go from positive delta to negative delta. And one of the big reasons for that is that, look, we just had a 20-point down day today. What's the probability that a huge move down might lead to maybe, what does typically happen? Usually the market either settles or maybe comes back a little bit. Does it ever go further down? Absolutely. And we all know experiences when that has happened. But the highest probability, and that's typically what we tend to deal with, is that it's either going to settle a little bit here and or maybe come back just a bit. So if we do, we don't want to change our sign to negative, because then if it really comes back quite a bit, then we could have we'd lose money today and then lose money tomorrow, as it be on the wrong side of delta. So what we typically would do is get this, and we would move this whole structure down. So just like how we moved it up, now we're going to move it down by, I believe we're going to move it down 20 points from 1170 to 1150. And there we are. Okay. Now in this particular case, okay, what we did here was when we moved it down, when I said we would typically go and do not change the sign, one of the things here is that we also tend to look and we see where and that a lot of it depends upon where you are in the trade. Since we are in the final week of the trade, or within the last couple of days of trading, at this stage, it's not, like I said, these are guidelines, they're not rules. And so one of the things is we would go and take this and move it down 20 points and then see what we look like and say, okay, we would need to address our risk, saying, okay, at this stage right here, if we're not comfortable with this position, 30 points in either direction, then we need to do some different kind of an adjustment. So in this particular case, I decided to just roll it down. Let's just go back here. I decided to roll it down here where we had the shorts at 1150 and 1180, and this produced a delta of about minus 68. So you'd say, well, wait a minute, we went from plus 100 to minus 68. Yes, so it's a little bit different than the norm, but because we're in the final week, we had to look at that and address to see what kind of a risk profile that we would have in the graph. At that stage, when I looked at it, and to keep it plus 25, we were too tight to the downside. So I wanted to be able to even this thing out a little bit more. So therefore, I actually ended up with this kind of an arrangement to be able to compensate for that, because we wanted to be able to have effectively a kind of a equal risk approximately in both directions. Okay. So I know there's a lot to absorb there, but let's move on to the next day. Okay. So now we got about 10 days till expiration. Now we're starting to take a look at our gain and loss. It's a little bit over 5% now. In this case, we did go down another 15 points. Okay. So remember, we went down that 20, and now we went down another 15. So, and look what happened. Our delta is now again over plus 50. Okay. So let's hold on one second. Yeah. So it's let me just check my notes here. Okay, yeah. So at this point right here, okay, so we've got some very, very interesting decisions. So by the guidelines, we would say, aha, Jim, we just say we'd have to do something, right? Just because of what this says, over 50?
Yeah, technically, yes.
Technically, yes, okay. But let's take a look at the graph, okay? When we take a look at the graph, we say we've got 10 days left to go to expiration. Our maximum delta is plus 50, but we would kind of call this, and Jim, you kind of remember this expression that we used in Hawaii, is that we're kind of sitting up on top of the ball. It's kind of like if you were a marble up on the top here, pretty much rolling down in either direction. You're not going to, you're typically going to be kind of losing in either direction when you're on the top of the ball. Maybe the absolute top of the ball is maybe here, but we're close to it. So we have some choices here. Okay, the choices are, well, we're up 5%, a little bit over 5%, okay, up around $2,700, so we could take that and be done, okay. Okay, from experience, okay, with people that, maybe if their goal is only 5%, well, they'd be done now, and they'd be done with the trade, okay. Or what could we do? We could stay put exactly where we are, or because we're over plus 50, we could roll it down. So as an M3 trader, you'd be saying, well, okay, what's the right one to do? Well, the reality is that there's no right decision here with the information that we have as of July 8th. If we, as I always say, if we had tomorrow's newspaper and we had tomorrow's results today, we would know exactly what to do here to make the absolute best decision. Because if the market was to go down 30 points and we were to, pretty much, lose pretty much all of our profit, well, we would obviously, the right decision here would be to take it off, or to make some significant adjustment, okay? So, like I said, it all depends on what we think will happen tomorrow. And it depends upon, if you say, well, hey, my max loss on this trade is, let's say we were looking for 10% on the trade, so that'd be $5,000. Well, we'd say, okay, well, what's the move that would bring us at $5,000? Well, it'd be about right here at 1142. So if we went from 1171 approximately down to 1142, okay, we would just be at our max loss. Now, you might say, well, I don't want to do that. Okay, well, this is where it comes into, the trader mentality. Is, maybe you say, well, gee, I don't really want to be down that much, that's not really my max loss. Maybe it's only 2,500. Okay, so it's like, okay, well, that means you only have to 1147 here. So this is where it gets to a decision point, okay? This is the artistry of the trade at this point, because you're starting to say to yourself, well, maybe the best thing to do is just to take it off, okay? For today, we're going to use it saying, let's not roll down. We're comfortable where it is right now, and let's go and let's just move on a day and see what happens. From experience, what would I do? I would probably just take it off, okay? But everybody has different, I may take it off. John would probably say leave it on. So, it really depends upon the individual person and their risk tolerance and their goals. You have to make sure that, John's goal may be 10%, maybe mine's 5%. And if I've met my goal, well, fine. I've met my goal, I take it off. It's as simple as that. Okay? But for since we're here just kind of learning, let's move on a day and let's see what happens. Okay? Well, what happened? The market went up 1 point. Okay? 1 measly point. So what did things look like? We're sitting here and we got exactly what we would have loved to have happen. What happened? The theta every day theoretically is $650. So look what just came into the P&L, went from $2,700 up to about $3,500. Okay, so here we are. We're in the same position again as yesterday. What do we do? So I don't know, Jim. Take the poll around the room. What would people do?
Okay, guys, what are we going to do?
Stay in.
Stay in. Everyone says stay in.
Stay in.
I'd definitely be out today, personally. However, I think I'm probably wrong.
Okay, well, I think the decision here is pretty much the same as it was yesterday.
Yeah.
Okay, we're pretty much right in the center. Okay, we have, we're right at the top of the ball. A big move. We're in a good position in the sense of being under the 10, and if the market does nothing like it did today, we're in good shape, right? So here we go. Let's move up a day and let's see what happens. Okay, so here we are. What did the market do? Well, it went down about 10 points. So let's see where we are. So we just kind of rolled down to here, okay? But the volatilities weren't well, it got somewhat affected because, see, we went up, we're now up $4,200. Remember the day before we were at, I think it was at what, I think 30s, I don't remember exactly what it was, maybe people there remember, maybe 3,500 or so. So it didn't quite go up as much as theta would be because we went down and probably volatilities came down a little bit, which took a little bit of money out of the trade. But again, here we are, we're at the end of the day on Thursday. Now remember, we only have one more day to trade. So again, I'll ask the people in the room, what would you do here? Would you stay in? We're almost at, we're not quite at 5%, you know, we're at 4%-ish. We're sitting here in the trade, and
It's a mixed reaction this time, Dave. Some people want to take the money.
yeah, okay,
But there are gamblers in the room.
I guess. But the reality is that, you know, here's, so like, remember we said before, we're like, you know, like airline pilots here. What are we looking at our checklist? What do we look? We're at 8 days till expiration. We have one more day to go, okay? Our delta is over plus 50. So there's a guideline that we're saying that, well, maybe we should have to do something because it needs a delta adjustment. So, you know, what could we do? You know, we could go and we could roll some of these 1180s maybe back to 1170, maybe 5 or 10 of them, okay? Okay, you could do that to try to help with delta a little bit, okay? To try to even out the loss a little bit. You could roll the whole position down, since that would be totally legal within the rules, okay? And basically, instead of having the blacked out being here, reposition it so that we're back up here, okay? For people that want to be very aggressive, but really want to address the risk, that's actually a really, really good move. You could roll the whole thing down and then reposition up here, so you'd have plenty of room to the downside and plenty of room to the upside. Because remember here, we're not that far away. We're only about what? Look, 1163. You know, 11, what? 50, there's 10 points. You know, 10, 12 points. Basically, you could lose all your money only about a move that happened like today. Okay.
Yeah, take the money.
So, you know, so a lot of different things can happen. Okay. And so, I believe what I did here. Let me just click here and let's see what I did. Okay, so I actually ended up moving the whole position down. Okay, to make it look like this. So we basically took where we were before, we moved it back up here. Okay, to be a little bit safer. So now, if you take a look at this graph, you can see that, you know, it's very nice and safe to the upside, and also we've given ourselves a lot more room to the downside to withstand a larger move to the downside if we ever had such a move, okay? So, hey, here's the last day. We got one more day to go. Let's see what happens. There's the drum roll. Well, look at that. We basically, the market did absolutely nothing. The theta popped in, okay? Didn't have to do anything here. Here's our position. And we hit our 10%. Here we're up a little bit over $5,000. And here's where we are. And we say, okay, you know, we've met a hard, you know, a hard number here, or a hard stop, I should say, being, you know, having that happen to us right on this last trading day. So there we are. So we met our 10%. Now, for you guys in the audience there that are just absolutely, you know, really, you know, just can't wait to see what this thing would have done, you know, a little bit further. Just for fun, I won't go through all the adjustments, but just for fun, I actually traded this thing through the next week until the end of the day on Thursday, and we actually ended up in this trade up about $7,500. Okay, and it looked like this.
Yeah, there are people in the room, Dave, that trade up to expiration, and they approve of that.
Yeah, and
I'm not quite sure myself.
So here's a half hour before the trade would expire,
Yeah.
and we were able to effectively keep our risk in check every day from Monday, Tuesday, Wednesday, and then to the end of the day on Thursday. And this is where we ended up on Thursday. And you can still see, we still had room. Here we are, 1134. We still had, 20, 25 points to the downside. The upside was totally fine. So, I monitored it during the week and was able to get the trade up to, I think the maximum I had on the trade at one point was about $8,000. So, but this was the end of the trade right here. So, so there's a there's a trade right through to the not only to 7 days before, but also to right through to expiration. And so you can see that the trade as it exists, you could make 10% going through the week before. You've basically made about 15% by taking it right through to expiration. So the trade can make very good money, but I certainly wouldn't recommend this last week to folk, and I would say better to be back here on Friday and have a graph that looks a little bit more like this and a little bit more easy to deal with, because when you get into the last week, it's almost like you can take the learning up to this point, and this is kind of like the undergraduate education. If you want to trade in that last week, just that 1 week, you got to get up to a graduate degree, because it's that much. It's only 1 week, but it's intense, and you really have to know what you're doing. So I would very strongly recommend people, unless they had a lot of experience, they don't do that, and they stay back here in the in the 7 days before. So anyway, so that's the end of the trade. Let me just open it up for any kind of questions folks have, or they can start throwing the tomatoes now or whatever.
Yeah, that's really interesting, Dave. There's a couple of questions.
I don't understand why we bought a call in the open trade and therefore created a much bigger risk on the downside.
Right, the question was why we had a long call, which just created more risk to the downside.
You're saying why did we add the long call right from the very start?
Balance the delta, but yeah.
You mean right from the very start? Why did we add delta?
Yeah.
Or why did we add a deep in the money long call?
Yes, to balance the delta, of course, but
yeah, I mean, if we go
but
back,
at the same time, the question referred to the fact that it increased the risk in the trade to the downside.
well, let's take a look, because let's go right back to the beginning, because it's a good question. So let me just go back here to May 23rd. Okay, so let's go right back to the beginning. Okay, so here we are. So let's take this call out of here. Okay, and then let's see what we got. Okay, so here's the choice. Okay, you either have this, or let's see. How can I do this? Or existing. Okay, so here's with. So the red line here is with the long call. The blue line here is without the long call. So the blue line without the long call, basically that's just a plain old bearish butterfly. Okay. One of the things, certainly remember one of the things that I mentioned at the very, very first part of when we talked was the difference between an M3 and a bearish butterfly. And this is pretty much what it is right here. We want to be able to, the M3 trade was a trade to learn how to be safe and learn so that you could learn how to trade options while being safe given a large market movement in both directions. Well, you can imagine that a large market movement on the downside with the bearish butterfly, you'd be jumping up and down and saying, hey, this is fantastic. But conversely, if you have a large market move on the upside, you'd be very unhappy and you would say, oh my gosh, now I've lost all this money. So it's as simple as that. It's, why do we add the long call? Yes, it does add this risk, the difference between these two lines here on the downside. But what we do is we wanted to create a longer T+0 line that is flat rather than a T+0 line on the bearish butterfly, which is, curved way up if it goes to the downside, which obviously is good news, but we don't want to have the bad news. So how do we mitigate that? Well, we try to just kind of, rotate it a little bit and move this line up, move this line down. And yes, that increases downside risk, but we're trying to have a better risk scenario overall for the trade. And it gives us a much wider, so if it sits here or goes down, you make out. But we're not so much trying to make money on the trade. We're trying to get you in a trade which is safe, let time go by, and let the options let them decay, so that more money comes into the trade. For people that if you don't want the downside risk of the M3 here, which remember at the very front we have adjustments to go and address that risk before you get into any kind of trouble. Because remember, on the upside with a bearish butterfly, you'll be in trouble very, very quickly, and you'll be down a lot of money. So that's what we're trying to avoid, people having that happen to them. So does that help on that?
Yes, I'm sure it does. Essentially, we're trying to keep a flat T plus 0 line and to be at the peak of it, or if there is a peak, at all times.
Yeah, it's you want to try to but to answer the gentleman's question, does the M3 have more downside risk to start off with than the bearish butterfly? And the honest answer is yes. And so that's a very astute question. But remembering that the whole premise of the trade is to keep you safe and to accept large market movements right at the onset of the trade. The bearish butterfly is, you're most vulnerable right at the very, very beginning of the trade, because you have no theta buildup in the trade yet. So any kind of an upside move and you're going to be down, for example, in this kind of a trade, if this was an M3, just to give you an example, you would be down, let's see, let's take a look at this. If you're trying to only look at 5%, and that would be a $2,500 max loss, you would have that within 11:51 to 11:26. So within a 25-point move up, you're already at max loss and you'd be out of the trade. So we're trying to not do that, because if you have a 25-point move up from here, you basically are still flat as a pancake. Like this.
Yeah, I think we've got that.
Okay.
Yeah, that's fine. Thanks, Dave.
Okay, great. So any other questions at all, Jim? Or does everybody just want to run out and do this?
Yeah, just the question, how many trades did you actually do in the trade that you demonstrated? Or perhaps another way to ask is, can we see the T-log?
Oh, sure.
Yeah.
Yeah, let me just hit this up here.
How many days did we adjust the trade, very roughly?
Well, let's see. We put on the trade on the 23rd, so there was adjustment on the 6th, the 9th, the 18th, the 20th, the 27th, the 1st, the 7th, let's see, the 10th, and then the 10th. So that's eight trades. But then this is, I think, during the last week.
Yeah, sure.
Yeah, so it's basically eight. There were 8 adjustments during, up to that final day.
And the nearer you go to expiration, the more trades you have to do, typically.
Yeah, then the last week I did a trade, 1, 2, 3, pretty much every day I needed to do something.
Yeah, sure.
Because that's where it gets kind of crazy time.
No more questions? Any more? No?
Okay.
Yeah, it's on the recording. Mike says our loudspeakers have failed apparently, but it's on the web and the WebEx anyway, so yeah, it's fine.
Okay, well, fantastic. Well, I really, thanks for the opportunity to come in front of you guys today, and hopefully, I know this was a lot to throw in an hour and a half, but I'm glad you guys hung in there for a little bit so we can get to the end of the trade to take a few questions.
Yeah, sure.
I'd say
we really appreciate you getting up so early, Dave. It's more of a more of a challenge for you.
Well, as you know, the market day here starts. The market day here starts at 6:30, so I would need to be up anyway. So
Yeah, sure. Yeah,
um,
yeah.
but as you know with the M3, given that we only check it kind of once a day,
Yeah.
sometimes you don't have to necessarily be up this early in the morning. So
Yeah, yeah, exactly. You don't in this country.
right, right.
We're checking it about 8 in the evening.
Right. Well, good. Well, hey guys, have a great evening. If there's any other questions or whatever, you can always, Jim, I'm Dave at lockinyoursuccess.com. So
Yeah,
if anybody has any questions or whatever, feel free. That's my email. So it's Dave at lockinyoursuccess.com. Jim, maybe you could, make sure people have
yes,
that.
I'll make sure everybody has that. And yes, we really do appreciate this, Dave. It's been great.
Well, good.
And,
Well, thank you
people
for.
were very attentive right to the last dollar.
Well, super, and thanks for paying attention, and hopefully, you've had something to think about here.
Yeah,
And
absolutely.
maybe something that maybe some folks might have some interest or whatever, and hopefully, it wasn't too confusing. But I know it's a lot to throw at you all at once, because remember, these trades are ones that John has his M3 program, which is has hours and hours and hours worth of demonstrations and all that kind of stuff. So. We had just a very short time to deal with that. So
Yeah, of course. Yeah, I think you did very well.
Hopefully it wasn't too confusing. So
yeah.
Anyway, well, hey guys, have a great day, and cheers.
Yeah, great. So thanks again, Dave, and we'll be in touch. Yeah, cheers.
Very good. Okay, bye bye.